This example alone for depreciation for the year calculation, estimate change, lifetime change, and residual value change. When calculate annual depreciation, if it has given estimate change, you have to apply cost minus accumulated depreciation minus new residual value divided by remaining useful lifetime. But normally depreciation should be calculated cost minus residual value divided by useful lifetime. But if it has given estimate change, you have to apply cost minus accumulated depreciation minus new residual value divided by remaining useful lifetime. Based on LK 16, in this example, asset purchased 1st April 20 and given cost value 3.6 million, lifetime 8 years, and given residual value also. Think purchase date is given 1st April 20, but given lifetime and residual value change on 1st April 22. It means after 2 years, estimate change. And given original estimate useful lifetime 6 years, as well as given residual value also 600,000. After 2 years, estimate change. There's depreciation for the year end 31st March 23. Think asset purchased before 2 years. Therefore, asset depreciated already. Normal depreciation should be calculated cost minus residual divided by lifetime. But now it has given estimate change. Our accounting period end of the year 31st March 23. Think normal depreciation should be calculated cost minus residual value. Think cost value is given 3,600, values in 1000, minus residual value also given 400, and divided by useful lifetime is given 8 years. Therefore, annual depreciation equal 400. Think up to beginning of the year, asset use already 2 years. From 1st April 20 to 1st April 22. Estimate change 1st April 22. Therefore, very important dates. Up to beginning of the year, asset use already 2 years. Asset use already 2 years. Therefore, accumulated depreciation should be calculated up to beginning of the year. Think annual depreciation equal 400 into 2 years. Therefore, accumulated depreciation up to beginning of the year equal 800. Now think how to calculate annual depreciation this financial year. Estimate change beginning of the year. If it is given estimate change, you have to apply cost minus accumulated depreciation minus new residual value divided by remaining useful lifetime. Think cost value is not changed. It is equal 3.6 million. But think as accumulated depreciation up to beginning of the year use 2 years. Therefore, 2-year depreciation equal 800 minus new residual value. And it has given new residual value equal 6 years, 600. New residual value equal 600. Now think divided by remaining useful lifetime. You have to consider remaining useful lifetime up to beginning of the asset use already 2 years. But given originally estimated useful lifetime. Original estimate useful lifetime is given 6 years, but asset use already 2 years. Therefore, as a remaining useful lifetime, you have to consider 4 years, not 6 years. Originally estimate useful lifetime is given 6 years, but up to beginning of the year, it has used already 2 years. Therefore, as a remaining useful lifetime, very important this point. Think how to calculate remaining lifetime. Given originally estimated useful lifetime, but up to beginning of the asset use already 2 years. Therefore, as a remaining useful lifetime, you have to consider only 4. 6 minus 2. Therefore, then can be calculated annual depreciation equal 550. Therefore, this is the value should be considered as a depreciation for the year end 31st March 2023. Estimate change beginning of the year. Up to beginning of the year, asset use already 2-year period. Therefore, question number 20 answers the fourth one. 20 answers the fourth one. Lifetime change, residual value change, and depreciation method change. Those are should be considered as an estimate change. Based on LKS 8, when calculate annual depreciation, you have to apply cost minus accumulated depreciation minus new residual value divided by remaining useful lifetime. But normally depreciation can be calculated cost minus residual value divided by lifetime. Very important points. Original estimate useful lifetime. You have to consider remaining useful lifetime. Therefore, 6 minus 2. Already up to beginning of the asset use 2 year periods. Therefore, question number 20 answers for